Hey friends, it's Gerald. Welcome back to another video. So today, Russia has officially declared war and launched an attack on Ukraine from both the north, the east, the south. Earlier this morning, in fact, or early afternoon, saw a video of basically soldiers reporting, bombs dropped in Russia. So my heart really goes out to the families that are living in there, that are affected by the attack, and I wish them well. So today I want to talk about as an investor, right? How is my portfolio affected? What are some of the conflicting information I have received or learned based on my research? I don't want to prescribe like, hey, you should buy, you should sell, because different people see things differently, and there are a lot of arguments to be made on both ends, right? But what I want to do is kind of give you an idea of what's happening, what are people feeling, what are some of the possible implications that a lot of professionals have noticed or spoken about during this crisis, and hopefully that will help you make a better decision as an investor. Okay, so let's look at first look at how the markets have responded to this official war. So yeah, as you can see, I think in anticipation for the war, SPY has gone down significantly. In fact, I think it was from almost 4,800 to 4.2, right? So by that definition, it's more than 10%. It's 12.5% drop approximately. So that's a lot of what a lot of market news or investors would say this is considered a recession, right? So SPX has, or the S&P 500 has entered a recession territory. So let's look at the Singapore market. So as you can see today, the Singapore market is just red, like really, really red. OCBC dropped by almost 5%, DBS was almost 5%, all the banks more than 5%. Everything except Rex International was green, everything else is red. So the market reacted badly. So for the crypto market, same thing, 6%, 9%, 9%. Stablecoin doesn't count because it's pegged to the dollar. So yeah, very, very red today. Stablecoin, the rest red. And you look at the all-time high compared to this current price, it's like less than half. Back then, I think Bitcoin was well over in the 60s, 60K mark. Ethereum was definitely past 4K because I've been mining Ethereum. So that's how I know that the market is very pessimistic for cryptos. In fact, I've spoken about it quite a few times, saying how the market is worried, and basically moving the assets from risky assets such as your Bitcoin, Ethereum to safer assets. In fact, now they even move it to places like gold as a hedge. So if you look at gold prices, kind of shot up by quite a lot recently. So let's understand the implications of the war, right? So what happens is that Russia is a major exporter of like oil and wheat. So oil is your petrol prices, your electricity prices, and for wheat it's like your bread, your pasta, your pizza. All these would be very affected if the overall, like basically the world starts to sanction and stop taking stuff from Russia. So what happened is that we can expect, because they are a major exporter, our prices of these things will increase. Or that's what a lot of people are thinking will happen. So then, another very important thing to take note of is that there's a key difference, right, between like a recession versus a bear market. So a bear market, or some people call it depression, is like a much more severe form of recession. There's no clear-cut definition of what is a recession versus what's a depression, but usually people would call it like 10 to 20% is a recession. More than 20% drop is like a depression, and depression is usually much worse and longer compared to a recession. So that's why over here you can see very quickly bear markets, right? In this case, quote unquote depression. That's what people are worried about. But if you look at the health of the economy, right? You look at the US economy, it's fantastic. Unemployment rate is low. Back then it was as high as 13, 14%. All this gray line represents a recession, by the way. So recession, recession, it was like 7.9. This other recession was 3.5. This other recession is 5.1. So employment rate is high back then. Right now, our employment is about 4%, and you see back then COVID, that little thin gray line, 13% unemployment rate. So right now, employment rate is kind of looking very, very good. When people have jobs, they can spend more money and businesses can earn more money. So the economy is still going strong in some sense. And another very, very important indicator that a lot of investors or traders look at is the yield curve, right? So because the yield curve has been one of the most successful tools in predicting, in fact, I think it's the best tool to have predicted the past 7 recessions. So again, the gray bars represent recessions, so it inverts, right? So the short term is So the short term is higher than the long term. So then what happens is that very quickly after recession happened, again, inverted recession happened, inverted recession happened, inverted recession happened, and yada yada yada. So right now, the yield curve is at a very healthy 0.89%. So when traders look at this, they don't foresee quote unquote like a recession or big recession is coming anytime soon. So right now, it seems that the panic hasn't gotten to that extent yet. If this falls to the negative territory, where basically people all start to move their assets and buy up short-term treasury bonds because they are worried, right? They want to move to safe haven. Then the yield curve will invert, and that's how this function, this tool kind of works to tell you that hey, people are basically quickly moving their money to safe haven in a very rapid pace in anticipation of recession, right? So right now, this looks very healthy as well. So another very key thing that we need to look at is how markets actually react to war. So I think this is a list of a lot of the past wars, like I think the 9/11 Pearl Harbor attack, North Korean invading South Korea, all the way North Korean missile, Syria bombing, Iran's invasion, U.S. terrorist attack is 9/11. Yep. So as you can see, right, based on history, when there is the news of the attack, there is like it's always negative. There's always a huge drawdown. But if you look at the days to recovery, it's all within a couple of months, with the exception of, I think, the Pearl Harbor attack and the Iraq's invasion of Kuwait. So most of the time, statistically, it should recover on average within like 1.5 to 2 months. But we should expect to see a huge decline in the upcoming weeks ahead. And in this case, I think one particular, closeness to the Iran's invasion is really the price of oil, right? Because I think everyone's worried about inflation, and inflation is expected to get a lot worse if Russia is, basically, they stop selling oil to other parts of the world. So then the question is, how related is oil prices to our S&P 500 portfolio? So then we look at the data. It's hard to draw any conclusion. So I think again, gray bar is recession, and you see that oil prices rise. As oil prices rise, the stock market seems to rise. But then again, here it went down, stock market went up. So there's no correlation. So it went up, oil went up, S&P went up, stock market went down, oil prices went down. If anything, it seems to that isn't a very clear correlation. But what's certain is that recessions will affect both the price of oil and the stock market. So that's what I draw from this. Again, correlation doesn't mean causation, right? So then for this, we can't really see how this war would affect the market. But when I try to learn from other investors on YouTube, they shared stories like such as when if oil prices increase, let's say for example the price of oil shoots up by another 10%, because right now it's at I think it was as high as $900 a barrel right now, right? So if it shoots up by another 10% more to $110 per barrel, then it is estimated that inflation in the US would hit like 10%. So then this sparks off a chain reaction of worries. So number one is that if inflation is extra high, then the Federal Reserve would be more inclined to increase interest rates, which would then spook the market a lot more. Then a counter argument to that is that historically, a rise in interest rates usually tend to follow with a strong, bull run of the market. So then, pros and cons, it's hard to tell. You want to trade, the reaction, or you want to trade the upturn. That's one. And another argument that's also really strong is that when people are fearful of the market, right? Like right now, they don't know what to buy, they're uncertain, like me right now, then they stop buying. So when they stop buying, then what happens is that demand drops. And when demand drops, then theoretically, inflation should slow down. So then, would inflation go up? Would inflation go down? Would the Fed increase interest rate more often? But if the market is bad, then Fed may not increase the interest rate as often. It's just plain full of uncertainties. So that's why, as an investor, I really am confused. But what I do know is that in the long term, the market always goes up. So as a rule of thumb, I think it's not a good idea to sell based on major economic news, right? Macroeconomic news. It's been proven like time after time that macroeconomic news do not cause like a major recession unless the fundamentals of the economy or the individual companies are bad. So that's why hopefully by sharing this video, I can kind of put a lot of things in perspective and help us kind of calm our nerves and put things in perspective when it comes to investing in assets. If anything, I think things are looking a lot cheaper now. Based like Tesla, I think reached the $800 mark is like 700 plus dollars. So Chicken Genius bought in at the high 800 is getting burned big time. So that's why yeah, but again, it's not good to preach what you should buy and sell because everybody's circumstances are different, right? So then, with that said, I hope this kind of gives you perspective. I know this is not prescriptive of hey, buy this or buy that. So I just wanted to give you an idea of what's happening. And apparently, NFT market is not quite affected. I looked at my NFT portfolio. In fact, it went up. So quite surprising. With that said, I will see you in the next video. Let me know what you think of this upcoming war in the comment section below. And yeah, I don't know if you like this kind of video. This is the first time I'm doing this kind of screen recording type style video of my research and speed in one take. So the filming style is very different. I don't know if it's good or bad. Keep in touch and take care.